A fiver for your thoughts on this. I think the bank crisis was spurred by the cheap money that was unnecessary because government policies would have handled the pandemic suitably. But there was a particular political bent in America at that point in time. Lots of money was printed. Other central banks did the same thing. Too much money was printed. It caused the value of money itself, obviously via inflation, to start going through this spiral. Banks had taken an awful lot of funding and put it into long-term fixed income, and the way that those funds are managed, they get paid with the other side of the trade, which in setup involves a swap and credit default swap, currency swap, mortgage-backed securities. Also, you're looking at swaps, and it's how much of these financial products work. And the dynamic was the treasury bond return went up, so people took their money out of these banks, which had relied on long-term depositors in order to facilitate the fixed income product. That money got taken out. They had to pay redemption fees on their own assets in order to fund those deposits, which meant taking a haircut on some of what is on their books. If you were to properly account for a lot of the way the bank's assets and liabilities are held, the way many companies do, you would see that the column hold to maturity can't be counted as an asset when it's underwater and costing money. So for these banks and the way that they do their accounting, they were able to make it look like they're all fine from a quick glance, when in truth many of them were hiding their own leverage positions in this accounting style. That left a number of them vulnerable when depositors started withdrawing their money and putting them into these other products, which left the banks losing money. Banks all lend to each other, lend to businesses. That's what spurns the economy. So it's a big deal if the banks go under. The government doesn't want that to happen. They've got policies in place which include lots of stimulus to help the banks help each other with a discount window and a bank transfer fund, which allows banks to borrow money from the Fed against the value of their collateral itself, judged against its long-term expiry value as opposed to its current value right now. So the Federal Reserve are lending money to banks, and the collateral being provided to them is effectively underwater right now. That dynamic, and we're trying to unseize the economy. That's the important part. Nobody at the back end of the power actually gives a flying shit about inflation. I mean, in fact, it's used on purpose. Nor do they care about whether or not you have a job. It's all about getting the economy working so that they can make money from the throughput. The question now is, what's the best way to unseize the economy? And it was, let's just try and get more oil in there. That caused a little bit of problem with the banks after COVID. Then here we'll just try and suck all that extra air out. That didn't work, and now they're like, well, we'll do a little bit of both. And so it seems as though they've committed to saving the banking sector in the way that they planned they would, making banks do it to each other. Bank Eat Bank World. Credit Suisse, then the way that situation was dealt with involved writing down the COCO bonds, the ATR1. These are bonds that would typically provide the investor with a lower degree of risk than shareholders, in that they'd get paid out sooner. But that particular to Credit Suisse, in their prospectus for that instrument, they said that that wasn't necessarily a standard they were going to keep to. It would be decided at board level. So when it came to it, they decided to screw the shareholders, and that was the distinction that was made, which was a line in the sand. Instead of governments paying, they made the bank make their shareholders pay, and they were able to do that, and it was a sign of strength. Obviously, that's not how it was seen at the time, mob rule and whatnot. The narrative right now isn't what come to pass. It's more what we'll see looking back, was that the governments were actually strong there. They have got other tools that they'll use later. And so perhaps the market is bombed. If that narrative is true, you would say, looking back in history, governments tend to help out the banks after we've seen the ultimate low. So that's what we're thinking with regards to the banking crisis. A lot of people think that's what's spurring on the value of Bitcoin, but that isn't. What's spurring on the value of Bitcoin is very large accounts buying Bitcoin because they're aware of the reason for all of the manipulation in the value of the currency is so that there's more dollars in the world, and not just physical dollars. It's those that are part of debt instruments, so that that currency, which drives all other currencies, will persist with a weighting heavily based towards the US dollar. It needs to be the dollar that everyone uses. So there's a balance between when America ever looking like it was going to default, and then everybody use it as much as possible by liquidity of the dollar, and that especially in distressed environments. So the Fed have got everybody in the rest of the world exactly where they want them, and due to the nature of money being valued against other money, because centres of production are valued against other centres of production, then it's very much in America's interest to devalue and print money constantly, because when you devalue, you're devaluing also your own debt. And if you're doing it in any way that expands the economy, then you are making yourself better off than every other country in the world due to the way the currency dynamics work. So you should check out World War Bitcoin if you're interested in the answer to that question properly.